Hi, everyone. Welcome, welcome, welcome. As you come into the room, please make sure that your microphone is on mute. I'm just admitting everyone right now, and we will begin the event shortly. While we're waiting for more people to join, I'm going to post an attendance form into the chat. If you'd like to receive the recording from this event and other important resources that will be discussed during the presentation, make sure to complete your attendance and to submit it by the end of the event. I am posting it again now in the chat. As most of you probably recognize me, my name is Christina Aaron. I am a Queens College career educator, and I represent the CUNY Leads program, which stands for Linking Employment, Academics, and Disability Services. If you are a student with disabilities and you are part of Queens College, please reach out to me, and I'll be more than happy to discuss the program in more length with you. Today, we have Maspeth Federal Savings with us. We have an amazing workshop prepared for you. This workshop is being recorded. If you require closed captioning, it has been activated. You have to navigate to the bottom of your screen, click on More, and select Show Subtitles if you need to see closed captions. So while we're waiting for more people to join, I'm going to launch a poll to just test your knowledge about financial literacy. So I'm going to launch my first poll for you. The ability to understand and use various financial skills, including personal financial management, budgeting, and investing, is the definition of. Select one of these answers that you believe is the definition. And I will share the results with all of you shortly. The ability to understand and use various financial skills, including personal financial management, budgeting, and investing, is the definition of. All right, I see some answers coming in. Great. Okay. All right, so I'm going to end the poll and share the results with you now. So yes, the majority of you answered correctly. 79% said that this is the definition of financial literacy, something that we will discuss in length today. And I am going to share my second poll now. All right. Lack of budgeting, excessive credit card use, and making bad investments are examples of. Is it an example of financial stress, smart financial decisions, common financial mistakes that students make, or impulsive financial decisions? Pick the one that you think is the best choice. Okay. All right, I still see some answers coming in, and we have more people joining, so we will begin shortly. And I'm going to end the poll in a few seconds and share the results with you guys. All right, so once again, majority of you answered correctly. 59% answered that it's common financial mistakes that students make. And this is the reason why we really wanted to create this specific workshop for you guys to educate you about financial literacy. You know, unfortunately, this is not the topic that we often discuss in high school, middle school, or even in college. And kudos to Florida that being the first state to integrate financial literacy as a required course to graduate starting in middle school, which is actually a great improvement. So hopefully New York will catch up sometime soon. But before that happens, we're here for you to help you out. And today, like I said, we have Maspeth Federal Savings, who prepared an amazing workshop for you. And I would like to start the event by introducing our speakers. Today we have Thomas Redzwick, who is the president and CEO of Maspeth Federal Savings and Loan Association. We have Akshay Mehandru, who is the vice president and credit manager, and Toya Brown, who is a retail banker at Maspeth Federal Savings. And without any further ado, I would love to start the event for financial literacy presentation. Guys, you're up.
Hi, Christina. Thank you so much for the introduction. I just want to mention it's so cool to have these poll questions come up before we start, and they're so appropriate. It's really a great opportunity for us to be here today and to be in front of all of the great CUNY organizational students that are here. I'm Tom Redzwick. As Christina said, I'm the president and CEO of Maspeth Federal. I've been employed with this institution for over 20 years. And I just want to say it's one of the coolest places to work. So I'm going to throw that out there. We have great internship programs and part-time jobs if anybody's interested to join our family. Little background on Maspeth Federal. We are a federal savings and loan association. We're a mutual. So that means that we're really owned by our depositors. And it means that we are really here to help our communities. The idea of the institution when it was formed in 1947, 75 years ago this month, was by a group of small business owners here in Maspeth, Queens, New York, that were realizing that there was a need for folks coming back to this area to reestablish themselves after World War II and start their home ownership journey. So basically, as a savings and loan association, I'm going to give you a little bit of homework right off from the start. And I know that we have a young crowd on the call today, but if you've ever seen the old movie, It's a Wonderful Life with Jimmy Stewart, it's usually on somewhere around the holidays. There's a company that's being focused on in that movie. It's called the Bailey Savings and Loan Building Association. It's the same kind of concept that Maspeth Federal adopted in 1947. This area of Queens was still a very much of a rural environment, if you can understand that. There was a lot of farms, there was a lot of open land, and construction started after the war to house the GIs coming home and starting family. And our local business owners here on Grand Avenue realized that many of them couldn't afford the homes that were being constructed and they needed a mortgage. So they went to the federal government and asked for a charter, and it was settled upon that it would be a thrift charter. And basically that means we take our deposits in and give a very strong return on those deposits. We offer CD rates as well. And then we would lend that out in mortgages. So as you see, a lot of banks today have kind of evolved that model to include so many other features. Maspeth Federal kind of stuck to that original format. And that's basically what we do. We take deposits in and we put them out in mortgages. And it's been a wonderful opportunity for all of our members, we call our customers members, to be a part of a neighborhood and a community. And that has grown from a very small storefront on Grand Avenue, housing maybe 7 employees at the time, to now a $2 billion plus institution with nearly 200 employees. So we're quite proud of the progression and the ability then to give back to those community entities. And we do an amazing amount of charity work here in Queens County and Nassau County and Brooklyn, throughout all of New York City. We are all participants in many of the service groups that are here. Many of the local hospitals and other financial institutions all participate to give back to the community. But Maspeth Federal has always been the lead. So I don't want to take a lot of time because I know you're here to learn about financial education. And to us, it means giving back to you, the student. We want to make sure that you understand the requirements and really the responsibility that you will have as you start to open up checking accounts, savings accounts, student loans, auto loans, all of those pieces, all the way up to whenever you buy your first house, that you understand where those finances are going to be coming from and what kind of obligations you will have to repay those. We're going to talk a lot about retail savings. Toya is going to touch on that in a minute. And then Akshay is also going to talk about what credit means. You have good credit, you have bad credit. Normally, we like to do this in person, and we give away some great prizes as we do this presentation. But in this virtual format, as we've all adopted over the last couple of years, I'm so happy and proud to be in front of the entire CUNY system. So without further ado, I'm going to introduce Toya Brown. If you do have questions, please put them into the chat box. I think Christina is going to be handling those and giving them to us at the end of the presentation. If you have asked any other type of polling question, we're not as slick as CUNY, so we just ask you to electronically raise your hand, and we can see a polling on how many folks are raising their hand in the chat box, and that would be helpful. We'll turn over to Toya Brown. Please come on up and talk about budgeting. Thank you.
Thank you, Tom. Good afternoon. My name is Toya Brown, and welcome to Savings and Budgeting for College Students, presented by Maspeth Federal Savings Bank. I graduated from Brooklyn College in 2019 with a bachelor's degree, and I'm now working for Maspeth Federal Savings as a teller at our Forest Hills location. And I'm also in training to become a universal banker at the same location. So please click on the raise your hand button if you know what a budget is or have been involved in creating your own budget or creating a budget with someone else. Very nice. Budgeting requires discipline. Having a budget is one thing, but sticking to it is a completely different thing. Budgeting is not about being wealthy. It's about being financially comfortable so that you can afford the things that you want and need. So what is a budget? The word budget can sound intimidating. It brings up images of long hours of writing, erasing, and calculating that only an accountant would love to do. However, budgeting does not have to be difficult. With the technology we have today, creating a budget and keeping track of your income and expenses is easier than ever. A budget is simply a plan for spending and saving your money. This plan should be flexible enough to change with your situation. Managing your money is one of those areas in which a plan can make the difference between being broke and being able to afford what you actually need. When we talk about a budget, we want to go over the 5 steps of managing said budget. The first step is to know what's important to you. What are your wants versus your needs? Once you have that idea down of your needs versus your wants, you can go on and set some goals. After you set your goals, we need to figure out your income and expenses to reach those goals. Once you have figured out your income and expenses and how those will affect your goals, it's time to really make the spending plan, which is another word for a budget. And the last and most important step to managing your budget is to stick to your spending plan. Before I continue, if there are any questions, please, on budgeting and credit and debt, or about Maspeth Federal in general, please feel free to put them in the chat, and we'll, at the end of the presentation, answer them for you to the best of our ability. So, know what's important to you. A key concept in budgeting is the idea of wants versus needs. All of us have been asked the question, do we really need that? Behind that question is a value system that defines what a need and what a want is. Some of the things that are important to you will be needs, such as food, shelter, and clothing, while others will be wants. Needs are the basic things that we need to survive. Wants are the things that make our lives a little more satisfying. Once you have an idea of what your needs and wants are, we can move on to step number 2 and set some goals. Ask yourself, what matters most to you? Is it getting a good education? Is it playing a sport well enough to go pro? Your goals are the specific steps you need to take to achieve what's important to you. Now, when we talk about goals, we want to break them down into 3 different types. The first type of goal that we have is what we call a short-term goal. And this is a goal that's in place for a week to 6 months. Examples of this type of goal could be saving for a date, saving to pay for a trip out of town, to a basketball game. I know it's March Madness, so you might want to go out and see a game, or to pay for fraternity or sorority dues. And the next type of goal that we have is what we call an intermediate goal. This is a goal you have in place for 6 months to a year. An example of this type of goal would be savings for a spring break trip, or to study abroad, or to even buy furniture for that new apartment you just got. The last type of goal we have is what we call a long-term goal. This is a goal you have in place for greater than a year. This is a goal such as saving to obtain a graduate or professional degree, or to buy a car. Once you have a good idea of what some of your goals may be and the type of goals that they are, you can move on to figuring out how much your goals will cost. There's nothing more disappointing than to save up for something only to find out that it costs twice as much as you expected. Do some research to be sure that you know what the actual cost of something may be. Also, think about how much you need to put aside each month to achieve your goal. For example, if you wish to fly to Florida in 3 months and the airfare is $150, you'll need to save $50 a month to achieve that goal. Lastly, state a target date for when so that way you know by this date you need to have this much saved so that you can achieve what you want and need. Moving on to step number 3, know your income and your expenses. Figuring how much your goal will cost along with figuring out how much you need to save each month will bring you to this step. How many times have we asked ourselves, where did your money go? If you don't know the answer, then it's time to really sit down and look at where you are not only getting your money from, but where it's going. This is where your income and expenses come into play. When it comes to figuring out what your income and expenses are, much of the information is already there. You just have to uncover it. If you work, figuring out your income is easy. If you don't work, think about all the ways you get money. Either it's from parents or guardians or from financial aid, and how much you expect that to be. Income does not have to be from a job. Anytime you have one of your expenses paid for, such as tuition, you have received income. Figuring out your expenses may be easy too if you have bills to pay, such as any subscription fees you have. I know I pay at least $10 for monthly for Spotify, so I know that's a monthly expense that I have to set aside. But where does the rest of your money go? To answer that question, it's likely that you'll need to keep track of your spending for a week or two. A great way to keep track of your spending is on what we call a tracking expense form. This tracking expense form is an easy way for you to keep up with everything you spend in a week. If you need to change some of the categories, feel free to do so. You can then easily total the rows and have a better idea about where you spend your money. If you don't want to carry this form around, just hold on to all your receipts, including cash, and fill out this form at the end of the day. If you do wish to carry this form with you physically or digitally, you can do that as well. If you take a look at the tools and resources document that can be found in the chat, you'll actually find the link to an empty tracking expense form that we have already created for you. If you wish to print this out and fill it in later, you absolutely can do that. If you wish to keep it digitally and have it on your phone or laptop, you can simply just type onto the document itself, and it'll actually total all of your income and expenses for you as you type your amounts in. One important thing I want you to remember about your budget is that it is your budget, meaning it should be tailored to you. And it's okay if your budget does not look like someone else's. because it's not their money, it's your money. So your budget will be different than others. The most difficult problem when it comes to budgeting is all the random or unexpected income and expenses that could occur throughout your college career or in life. Flexibility is key. Your budget should be flexible enough to change with your situation. So it's okay if your income changes or your expenses change. Nothing is set in stone when it comes to a budget. So step number 4, making a spending plan. After you have a good idea of how you spend your money and where it comes from and where it goes, it's time to put together a spending plan that will allow you to meet your financial goals. Again, flexibility is key. So your plan is only a guideline. While you're making a plan, keep in mind what is most important to you. In the following example of a spending plan, there will be columns for expected and actual income and expenses. Examples of expected versus actual expenses are when your phone bill is greater than you anticipated, or you have extra deductibles in your paycheck that you didn't expect. You must also decide the period of time for which you are budgeting. The sample spending plan that we have will be looking at a month of a spending plan. So here's an example of Johnny Knight's spending plan income part for the month. As you can see, he has divided it into expected and actual. And on the income side, he's put grants, scholarships, loans. He is working, so he has jobs up there, and also he's getting money from his parents. So that's up there as well as for income. You can see that at the end of the month, Johnny Knight reviews his spending plan and realizes that he actually received more of an income than he expected. So he expected to only receive $4,700 in income, but he actually received $4,985. So he had a positive $285. When it came to his expenses, Johnny Knight not only broke it down into expected versus actual expenses, but he broke it down further into college expenses and living expenses. And that's a great thing to do. Your college expenses, for Johnny Knight at least, he put tuition and fees and books. For living expenses, he put rent or dorm. If he is going away to college or even staying home, he might choose to dorm, so that you can add for an expense. Again, at college, there are meal plans, so that's another expense. And there's also, sometimes you just want to order Uber Eats or DoorDash, so you would have that also as an expense. And of course, social activities. Again, there are expenses in the spending plan that may not occur each month, and that is okay. Remember, your budget is not set in stone, so if any changes need to be made, you absolutely can do that. Also notice that the social activities expense and the non-meal plan food expense were greater than expected. As you can see, for his non-food plan meals, Johnny Knight only expected to pay $80 for his expenses for the month, but he actually spent $100. So he had a $20 difference. As well for social activities, he thought he spent no more than $120 on that, but he actually spent $150. So there was a difference of $30. So for the month, his expected expenses came out to be $4,540, but he actually spent $4,695. So he had a difference, he was in the negative of $155. And that is okay. He's still learning, as are you, on how to really stick to his budget and plan for expected and actual differences. So in conclusion, as you saw, the income was $4,985 for the month. His expenses were $4,695. So we actually had a positive difference and saved about $290. The bar graph to the side is a greater visual example of how you can see the difference in the income and expenses that Johnny Knight had in college. The last and most important step for managing your budget is to stick to your spending plan. A spending plan is useless if you don't actually follow it. You have to make every effort to stick to your spending plan so you can afford what you need and hopefully what you want. If you start the budgeting process by identifying what it is that is really important to you, it will help you stick to your spending plan. You are more likely to stick to your plan if you remind yourself why you're doing this. Remember, you're doing this to meet the financial goals you have set for yourself. When it comes to sticking to a spending plan, so there's some areas that you might want to control. What you might want to control impulse buying. Don't go window shopping to see that new pair of sneakers or that new Gucci purse or belt that's in the window. Maybe control your decisions. Decide to only order from DoorDash or Uber Eats once a month instead of twice a month. I know I had to change my budget when it came to ordering because Uber Eats raised their prices because of gas prices. So I'm really not even touching Uber Eats at the moment. And control your responses. If you can't afford it, just say no. It is okay to say no if you can't afford it. And control your consequences. Pay with cash or use your debit card instead of using your credit card so that you don't have to pay for interest later. In the next part of the presentation, my partner Akshay will be talking to you about credit and debt so you can go further into good and bad debt. Remember, this is your money we are talking about, so you want to make the most of it.
Thank you, Toya. I just wanted to also, point out that I posted for everyone what Toya has just covered in the presentation, a couple of links for you to use, a monthly budget worksheet and developing habit of saving tip sheet. And I've also attached a PDF document for you to open and download into your laptop, how to track your expenses, something that Toya presented as well. So pay attention to the chat box because all of these resources I'm posting there right now. Thank you, Toya.
Thank you, Christina. Once you have stuck to your spending plan for however long you have it for, whether it's a month or a week, you want to evaluate your spending plan. You want to ask yourself, how well did you stick to the plan? What areas did you have problems in? As you saw with an example of Johnny Knight, he had problems in the area of the expenses for his social activities and his non-food meal plan. You also need to ask yourself, were you reasonable in making your goals? Say if you're saving for a car, are you saving for the new Lamborghini or the used Toyota Camry? There's a difference. And lastly, what changes need to be made? Remember, flexibility is key. Your budget is not set in stone, so changes to it are okay. And lastly, I just want to go over the 5 steps with you. Remember, step number 1, know what's important to you. What are your needs versus your wants? Step number 2, set some goals. Step number 3, know your income and expenses so that you can achieve those goals. Step number 4, make a spending plan. And last and most importantly, stick to your spending plan. I know it's going to be a challenge for some, but it is to benefit you at the end of the day and to help you make the most of your money for college. I thank you for your time, and I'd like to welcome up Akshay to share some information about credit and debt for you.
All right. Thank you, Toya. Thank you, Tom. Thank you, Christina. And thank you, the audience, for allowing me to present today. My name is Akshay Mahendra. I'm the credit manager of Maspeth Federal, where my team and I review residential and commercial loans to make sure that borrowers can qualify for the loans that they apply for. I also graduated from a CUNY City Tech myself. So, go CUNYs. Before we get started, I just want to make sure, can everybody raise their hand for one moment? Just click the raise your hand button, please. All right, good. We have people still with us. Perfect. So just wanted to make sure I'm going to be doing this throughout the presentation, not just to keep everybody with me. Also with questions throughout the presentation, I encourage you to please type your questions, all questions relating to credit, budgeting, everything. Just ask us because we're going to answer them at the end of this presentation. So with credit and debt, right? What we're going to do today in this module is understand how credit and debt play an important role in our daily lives. How can we leverage our knowledge of credit and debt to grow financially? You're going to understand, basically the different types of credit, how to maintain good credit, how to qualify for it, and also properly manage debt. Now, before we also begin, remember, credit doesn't exist without a good budget. You have to budget for loan payments coming in the future. So starting with what is credit, right? In simple terms, credit is a contract between a borrower and lender to obtain something. Now, I'm sure many of us have a credit card, so I'm not going to ask you to raise your hands. But in simple terms, okay, we're still raising our hands. Very good. Good. I like that. So, when you have, let's say, a credit card, that means that you're not able to make the purchase happen with cash, but instead that you're using alternative means of borrowing to make that purchase happen. Whether it's a laptop, a car, clothes, a book, anything, Starbucks, you put it on a credit card. So, that's what a simple form of credit is. Now, something, as I just mentioned, it can be defined as money, goods, and services, right? If you need access to $5,000, right? Let's say there's a personal family emergency and you don't have the cash in your bank account. You go apply for something called a personal loan, where you get a lump sum of cash accessible through a form of credit. You need a new laptop, that's goods. You want to borrow on a credit card because you can't make the purchase full in cash. That new iPhone that costs $1,000, maybe $2,000, right? Are you going to pay $2,000 for a brand new iPhone cash? Maybe not. Maybe you're going to go with T-Mobile, AT&T with the payment plan. That's a form of credit. Services, your education. If you're not paying for your education in cash, you're getting a student loan for it. That's a service. That's your education. That's your borrowing money for your education. The most important thing in this module when it comes to credit, and this is something I personally live by too, is I remember and I tell myself, credit is not a right but a privilege. No lender is obligated to lend you money if you don't qualify for it. You cannot go knock into a bank, a credit union, a financial institution of any type saying, hey, I need $10,000, please give it to me. It's not how life works. You have to qualify for credit. And we're going to learn about that today. So one important thing I want to say is, we have a credit card where I'm pretty sure a lot of us have. Then we have a debit card. I just want to explain the difference. Debit card is cash access. This is cash on hand in the form of this piece of plastic, and you're going to use it to make purchases. Okay. A credit card is not your money. You have access to somebody else's money, which is a bank or credit union or any type of other financial institution. You're borrowing from that institution to make this transaction happen. That's the big difference between debit cards and credit cards. Always remember that. Now, another thing, right? This time, raise your hands. How many of us shop on Amazon? Good, perfect. Everybody shops on Amazon, right? Now, when you go to Amazon, you're going to that checkout page, right? You have something called Affirm. You can buy now, pay later. That's another form of credit. You're borrowing from Affirm saying, hey, I promise to pay this back in 6 months, etc. But, there's another saying, reading is fundamental. Read the interest rates that you're paying to borrow those, for 6 months and pay it back. They're astronomical. But that's a different topic we're going to get into. So common types of credit and debt, right? Credit can be secured by a collateral, physical item of value, or unsecured. We're going to, please mute your mics, everyone. So we have unsecured and secured, all right? We're going to start with unsecured. As we just talked about, the most easily accessible form is a credit card. Let's say you're going to Best Buy, okay? They always encourage you sometimes, anytime you go to a retail store, hey, we have a promotion going on, please apply for this credit card. Are they taking anything of security from you? No, they're running your credit report, which we're going to get into, to make sure you have a good credit score, which we're also going to get into, to make sure you qualify to getting that credit card. Unsecured, you get a limit. Let's say Best Buy approves you for $3,000. You could potentially use $3,000 to make purchases. Should you? The answer is no. And I'm going to get into that. Personal loan. A personal loan is when you need cash access, as I mentioned earlier. Let's say you need for family emergencies, anything. You need to make a big purchase. You need $10,000, for example. You don't have the $10,000 cash, right? You're going to borrow. You're going to go to a bank or credit union and say, hey, I need to apply for a personal loan. They'll review your capacity to pay that loan back. And they look at your income, look at your credit score, and see if you qualify for that $10,000 lump sum payment. Usually, let's say you qualify for a personal loan, you'll have a fixed payment term ranging from 5 to even maybe 7, 8 years with a fixed interest rate. Maybe it could be variable, always read the fine print, and you're going to have monthly payments set up. And all of these 5 examples you see, you're going to have a monthly payment set up, which has to be factored back into your budget. So this goes right back to if you're budgeting for it, then you should look into credit. If you didn't budget for it, you could still look into credit, but remember, you're going to have monthly payments due, which will affect your budget. Credit doesn't exist without a budget. Student loans. Now, a lot of us are in school right now. Perhaps you have student loans. Maybe you have scholarships, maybe you have funds from family, or you use your own personal funds, but maybe you have student loans. While you're in school, most loans, student loans don't require repayment. Once you do graduate, you're going to have payments due. So if you have, let's say, for example, some of the lenders, Mohila, Navient, go online, after this presentation, just check out what the rates are, what your expected payment is going to be, what your balance is. But I noticed, throughout my career, I asked folks, and even borrowers, they have these student loans on their credit reports, and sometimes they don't even know what their payments are going to be. They went to college, great, perfect, and they took out these student loans, okay, but they don't realize what their balances are at the end when they graduate, or what their payments are going to be due, what their interest rates were. That's also an unsecured form of credit. You're getting a student loan to pay for your education, usually going directly to the college. Secured, as Tom mentioned earlier, mortgages, right? Maspeth Federal, that's all we do, mortgages. Mortgages are secured by real estate, commercial, residential. The institution would hold that collateral as security and lend you a lump sum of money. Usually the rates are fixed, but they can also be adjustable. They go from 15, 30, but there's different terms. Secured by real estate, and that's going to be one of the biggest purchases you do in your lifetime. So it's always important to know, shop around. You have options, and with good credit, you have even more options. Auto loan, the second biggest purchase you'll do. You're buying that new car, right? With the car market right now, it's ridiculous. You're buying, let's say, a brand new Honda Accord for $35,000. Maybe some of you can relate. I think it's pretty high, but that's besides the point. But that's a secured form of credit. You're going to a lender, you go to a dealership, they'll put a lien on your auto, and you have a fixed payment to make the payments back to the lender. And that's a secured form of credit. Now, where to find your credit score? Fair Isaac Corporation, everybody remember that, FICO, right? This is the credit score from the 3 credit bureau agencies, Experian, TransUnion, Equifax, that range from a low 300 to a high of 850. Again, a friendly reminder, if you have questions, write them in the chat box. We're going to answer them today. These 3 credit bureau agencies report all your credit history. If you borrowed on that credit card, if you borrowed on that student loan, you borrowed on that auto loan, your mortgage, your financial history will be on these 3 credit bureau agencies as a report. This is your financial GPA. You care about your GPA, you should also care about this GPA, which is your financial GPA, which is your credit score. I highly recommend everybody, even after this call we're going to have, go online, check out these 3 credit agencies and learn about them, and also how to get your free credit report. They're free, by the way. To get your credit report once a year, it's free. Let me just show you where you can get it. www.annualcreditreport.com. You can get this credit report once a year for free from each of the credit bureau agencies. Now, please raise your hand if you've received your credit report in the last 12 months or if you've checked it. Okay. I need more hands, Pete. More hands. Okay, that's good enough. That's good enough. So checking your credit report is very important. You're applying for, you have a credit card, you have a student loan, for example, or auto loan, you're making payments on it. You want to make sure that your payments are being reported accurately, and also to prevent any fraudulent credit being reported. With identity theft, there's a lot going on in the world. So making sure that, hey, what's on your credit report is accurate, and maybe you didn't have your identity stolen, somebody's going out there making new credit cards in your account's name, in your social, you have to check that. And I highly recommend that from all three credit agencies. I personally also use Credit Karma. It's another free source. You could check to see your credit score. It's not going to be your Fair Isaac Corporation FICO score, but it's going to be like something called a Vantage score. It's not as accurate as your FICO, but it's very close. Now we have a sample of an Experian credit report. I just wanted to show everybody once, because when you get this report, you're going to see, hey, what's going on this report. Something from Experian, this individual has a pretty good score, 723. They obviously did something good, and we're going to learn about what they did good to earn that good credit score. But again, I'm repeating myself, but I want to. So we want to go online and get our copy of our free credit report from those three agencies. It's very helpful. I highly recommend it. So how do we get that 723 credit score, right? Well, right here, this is the answer. We're going to read it and we're going to understand it. So what do creditors look at to see if I will qualify, right? To get that top tier credit score, the first and most basic thing, payment history, 35%. You borrowed on a credit card. Let's say you have a $5,000 limit now. You borrowed and you're using $2,500 of it, 50%. It's fairly high, but we'll get to that. You're making payments on it regularly and perfectly. Your credit score will increase. You miss a payment, 1, 2, 3, your credit score will decrease. In simple terms, if you borrow, you have to pay it back. That's what you agreed upon when you borrowed that money. If you're not going to pay it back, don't borrow that money. Next, we have credit usage. Like I said, $5,000 is your limit. You're using $4,999. That's a red flag. You're almost maxing out your credit card. When you max out your credit card, or if you go over your limit, you will be hit with fees and high interest charges, and your credit score will go down because you're using too much of it. Ideally, it varies. If you Google this, how much of my credit card should I use? From me to you, I would recommend 15, 20, maybe 30% maximum. I understand things can happen and you need to use credit. Remember, you have to budget for purchases. If you're not budgeting for it, it's okay. You can use your credit card, but remember, you have to pay it back. So keeping your credit usage under 30% is good, and it actually comprises of 30% of your credit score. Next, we have length of credit history, right? Personal experience. I started my credit, first credit card when I was 16. Back in the days, I have siblings. I started them and I added them as authorized users on mine when they were younger, and I helped build their credit. So they've started at a younger age. They have good payment history. I have good payment history on my credit, and I have a good long history. That history helps. It shows other creditors that, hey, they've made consistent payments on their auto loans, credit cards for the last 5 years, and their credit score is so good. We want to consider them for that new car again or that mortgage. So it's important to have, a decent credit history, but it's okay. Maybe some of us don't have credit cards, but I highly recommend you start somewhere, okay? It's very important to build credit. Now, credit mix and new credit, 10% each. They're small, but they're very important. So let's say you started your credit, history at 18. You have 15 credit cards. That's awesome. You have 15 credit cards. Maybe you only use like 2 or 3 of them. That's not healthy because, maybe you have a car loan or maybe you're looking into a car loan. It's good to mix up the credit. A new lender will also look at, hey, you have all these credit cards, but maybe you're applying for an auto loan. You don't have any history. So they'll be conflicted, but it also affects your credit score. It's a low impact, but it is an impact. So over time, you'll get that credit card. You'll get that student loan. Maybe not. Maybe you'll get an auto loan. Maybe you get that mortgage and so forth. Remember, all these loans are reported on your history and they stay there. You miss that payment, it will stay there. You max out your credit card, it will be noted over there what your usage was at one point, the high usage. Your length of credit history, your oldest account will be there on that report. All those mix of credit, the credits that you have, they will be there. Now, new credit. I'm going to take the current situation, right, with mortgages, for example. Some people are going out to buy homes and they're doing mortgage inquiries. They want to shop around for the best rate. They have to do a credit inquiry. If a new creditor is going to consider them for a mortgage or a car loan, any type of credit, the creditor has to check your history. It's okay. It will impact your credit score just a little bit. It can range anywhere from 5 to 15, maybe even 20 points. However, your credit score builds over time. remember, if you're going to apply for that car loan, you can't tell a creditor, hey, don't run my credit. They have to see if you qualify, you have a good payment history, you have a good credit score. And it's okay with the credit inquiries, but excessive inquiries can be damaging. Always remember that. Now, what is good and bad debt, right? We talked about, different types of debt. Now I'm going to make a generalized, session of what is good and what is bad. So you see a lot on the screen, right? Low interest plus more time to pay. Raise your hand if you feel this is good debt. Okay, raise your hand if you see this is good debt or bad debt. Okay, perfect. Good. All right, so that's good debt. I'm gonna explain why. Let's say you have, for example, $10,000 at 4%, and you're borrowing it to pay it back over 10 years. Your monthly payment's at $101 monthly. The total interest you paid over 10 years will be $2,149. Now you have access to $10,000 at 4%, and you're paying it over 10 years with a small monthly payment of 101.25. That's good, that's healthy. And we're going to compare it to the second option, which is obviously a form of bad debt. High interest plus less time to pay. You have the same amount, $10,000 at 8%, over 5 years. Now, you went from paying $101.25 to $202.76. Your total interest now that you paid by taking the second option is $2,165. Not too far off from the first option, but how does this affect your budget? You got the same amount of money, but you're obligated to now pay it back due to in a shorter time period and at a higher rate, which would most likely also mean that maybe your credit score wasn't as good. Instead of paying $101, you're paying double. So it affects your budget. It's going to constrain your budget. But the beautiful thing with option one is that you have the flexibility to make extra payments on the loan payment. So if you're making an extra $50 payment, your total interest paid over the course of the loan is only $1,315. You saved $834. The one thing I want everybody to understand is that always read the fine print. Having a good credit score is important. And if you're getting access to a loan, I love loans, honestly. If you're getting access to a loan at a low rate with more time to pay, and you have that beautiful flexibility to pay extra to that loan payment over time, I think that's a very healthy form of debt to have versus your credit card, which is ironically the worst form of debt you can have and carry over. If you have a credit card and you keep $1,000 balance over and over, and you're only making your minimum payment on your credit card statement, you'll see there's small options where they say, hey, if you only make the minimum payment, you're going to pay this off in like 10 years. Versus if you make a little bit over the minimum payment, you'll pay it off in 4 years. But regardless, look at the interest rates. Your credit cards have an interest rate ranging from a low 15% to a high of 30 plus. That's the worst form of debt to have, but it's also the easiest way to access it too. So, I'll dig deep into the credit cards portion for a second. Right now with credit cards, with everything going on, there's so many options, right? Let's say you have a good credit score of 750. You can get a credit card that gives you perhaps 2% cash back, on every purchase. There's credit cards out there. So always Google and see what your resources are, what your availability is, what are the options. If you're getting 2% back on every purchase and you pay it back every month, let's say you charge $2,000, you're going to get an extra $40 a month. You do that regularly throughout the year, you're getting $480 extra cash access to you. So that's healthy to then have, but only if you pay it back every month. If you don't pay it back every month, you're going to get charged an interest payment, interest charge. That's going to be substantial. And come on, who wants to pay 25, 30% on interest? So to conclude, it's a very important message I want everybody to read with me. You can read it. I won't hear you, but try to read it with me. So remember, with good credit, great power comes great responsibility. I wanted to replace it with good credit, but in every, it's on a side note, with every movie, there's always an important message. Financial literacy is so important to us that, if we learn this early on, it can help us in the future.
What movie is that, Akshay?
Let me think about that. I think it's Spider-Man. It's the first Spider-Man movie back in 2001. Tobey Maguire. I don't know who this gentleman is, but I apologize. But it's also important to remember that financial literacy, we should learn early because we need credit. We need to have a budget throughout our daily lives. Personally, myself, I'm going to go from this meme so you can focus on me for a second. Personally myself, I keep a budget on a daily, weekly, sometimes monthly, basis, and I track myself with my spending also. And it's important. We do it on a regular basis. Sometimes we don't even realize it. It becomes like breathing, and that's what financial literacy is all about. So I just want to thank everyone over here. We have our contact information here, and I just want to welcome any questions you guys may have. I'm going to give it back to you, Christina, if you have any questions.
Thank you so much. This was such a great presentation. I haven't seen any questions posted in the chat, but students, if you have any questions that you'd like to ask, either post them in the chat or just unmute yourself and ask our presenters directly.
Don't be shy.
I think they're still digesting all of this information.
Okay, we'll give you a minute, 2 minutes.
The other thing too is if you notice, we have our contact information up on those pages, both for Akshay and Toya. And please contact us, ask us any questions at all. I hope that the presentation gives you some direction on what of the things that we feel are important for young people to look for financial literacy. And I've also invite you down to come to Maspeth Federal anytime you'd like. We have some great concerts that we have planned for this summer, free in our parking lot on 69th Street and Grand Avenue in Maspeth, and also movie nights. And we have a tremendous festival that we do for free. It's called Smile on Maspeth Carnival, and it's a wonderful event. And you're welcome to come down here. We'll have some of our representatives here under the big tent to talk about anything you want to talk about, financial literacy or any other types of pieces. So please. Use us as your source of information. That's why we went to school for it. That's why you're in school to learn about it. So thank you very much. Christina, any other questions or?
Did I hear it correctly? Did you say concerts?
Yes.
Oh, nice.
We have a concert series that we do every year free for the community. We usually do those on a Wednesday night during the summer. I'd be happy. It's on our website. If you go to our links page, we're ready to set that up in a couple of weeks, right? We'll have that up in a couple of weeks, and I'll have all of the events that are going to be happening. We have some really great artists that come in, and a really great opportunity to kind of enjoy yourself under the stars here at Maspeth Federal. So please come by.
Thank you so much. I remember when I was a student at Queensborough Community College, I was very young back then. There were tables outside of a cafeteria. Apply for a free credit card. And of course, me at the time, I had no idea what financial literacy is. And I'm like, oh my God, let me get a credit card. And I applied for like 3, I remember. And someone just posted a question to remind me of that when I was a college student. They asked, how many credit cards do you recommend having as a student? And what's the most important thing to consider when applying for a credit card?
Good question. As a student, it's also based on your needs. So what I would encourage is, look at your budget on a monthly basis, right? Do I need this credit card? I'll be very blunt with everybody. I think everybody should have at least 1 or 2 credit cards, at least. Building your credit history and keeping it open. One important thing I would like to say is if you have your first credit card that you open, try not to close it out. That is your oldest account and it affects your new credit. Let's say 15 years later, you open a new account. On your record, it will still show that you have an open account 15 years ago. If you close that and you only had 3 recent accounts in the last 3 years, essentially you only have 3 years of active credit history from systems and potential lenders. That affects your credit score. So having 1 or 2 credit cards is important. Knowing your limits, using it and paying it off every month to avoid the interest, and having your oldest account open, I think is a very important thing to do. I personally still have my account from when I was 16 still open, just because, and I use it occasionally, but my primary card I use is a 2% cashback, which I made the reference of. Cashback is important, so I hope that answers your question.
Christina, I just want to add to that. I did the same thing when I started in school many, many years ago. And I still have that account open today. But unfortunately, there was not a financial literacy course when I was in school. And by my sophomore year, I had a tremendous amount of debt on that credit card that hurt me for over 5 years to finally realize how I needed to correct that and get rid of that debt. Now, here I am, the president and CEO of the bank, and I'm admitting I was not a very good financial student when I was in college. So the budgeting piece of that, Toya mentioned to us, is one of the most critical pieces, because you need to look at that on a very regular basis. Every week, every month, every quarter, you should be going through those budgeting tips that we're presenting so that you know what your expenses are going to be. Because it's nice, because you open that account, that credit card account, and they give you $5,000. Well, I spent $4,099. So make sure you're looking at that and you're budgeting those properly, because that's the most important piece. The other side of this really is what a debit card is. And the difference between credit and debit is another presentation that we can provide to folks for you, because a debit card really is a savings account that you're able to draw on, but you're not going to go over what that limit is. So if you want another presentation, we'd be happy to bring that in and talk about the difference between credit and debit. So thank you very much. Gang, anything else?
I mean, I'm sorry, I just want to say one thing. So one important thing Tom said, right, is, financial mistakes happen. We all make them. There's nothing wrong with that. The important part is, you're learning from these mistakes. You're learning that there's resources out there that you can learn from and absorb. So look, there's myself too, my first card, I maxed it out. I made that mistake. It's all my history, but so what? Your credit score builds over time. You learn from those mistakes. So keep a budget, but mistakes happen and it's okay. I'm sorry, Tori.
Yeah, I just wanted to point out that on the tools and resource document that you can find in the chat, we have put up also apps for budgeting. I've actually downloaded all the apps and tested them myself. The YNAB app, I do want to just let you know that there is a fee for that after the trial ends. The rest of them, they do not seem to have any fees that I've come across, and they're actually free for you to download.
Great.
Well, the hope is that at some point, hopefully what will happen soon, that financial literacy will be integrated into a curriculum and would be a required course to graduate. So I'm not sure why it hasn't happened so far. And I know we mentioned before that just recently it was integrated in Florida, and that's the first state to ever do that. So I hope that other states will follow suit, hopefully soon. We have another question directed to Akshay. You mentioned that credit card debt is technically a bad form of debt. Can you explain some good forms of debt? And I know you covered that in the presentation, but if you could just reiterate a little bit more.
Sure. So thank you. Thank you for whomever asked that question. So yes, I did say credit is a terrible form of debt. I'm gonna add to that, if used improperly. So a good form of debt, right, can also be a credit card if you pay it off in time, because these credit cards nowadays, they come with so many rewards. And essentially, you're using credit, you're paying it back, and you're being rewarded for it. Meaning you have good payment history, you're paying off your balances, and you're accumulating points. That can also be a good form of debt. Another good form of debt, anything with a low interest rate. Now, one thing I didn't touch on is the prime rate, right? The prime rate is a lot of what banks use to determine these revolving consumer loans. Right now, the prime rate, I think, is about 3.5% now. It's going to rise in the coming months, potentially. But that prime rate, anything you can get close to that prime rate is absolutely amazing. Let's say a mortgage, right? A mortgage is a secured form of debt, but the rates are still substantially lower than consumer debt, and you have a piece of real estate. Auto loans, right?
That's 5% versus about 21%.
Correct, and even higher with some credit cards, right? So an auto loan, it also depends on the rate. If you have a good credit score, you will get a better rate. You will get a preferred rate from lenders because you're deemed lower risk. With a lower credit score, you're deemed a little bit of a higher risk, which means that the potential lender will raise your rate. So always read the fine print. And I always say to myself that if I have opportunity to take a loan at a longer term, I would do that. People would argue with me and say, hey, you're paying more interest over time. I was like, that's true. That's a fact. However, I have the flexibility, and I'll make sure in my budget that I could pay extra towards that monthly payment. This is an interesting fact. If you take a 30-year mortgage and you pay one extra mortgage payment a year, you'll pay off that mortgage instead of 30 years, instead 5 years sooner. Just one extra mortgage payment a year. I think it's pretty cool. And I mean, in terms of apps, right? Actually, I have on my phone, I have a calculator app, a loan calculator app. There's various on iOS and Android, but I always keep that on me just in case if I'm like, let's say I'm shopping for a car, or I want to know what the loan payment is going to be. What if I pay so much extra per month? How much money do I save in interest? So I prefer that if you're going to get a lower rate, shop around, first of all, a good form of debt. There's not just one lender out there. You shop around. You get whatever the best rate you can. If you could get a longer term with a good rate, take it. And if you have the option with no prepayment penalty on those loans, prepay it early because you have that flexibility. I personally love the flexibility to pay a loan extra per month and reduce it based on what my budget is for that month or that year.
Great, thank you. Okay,
So the next question we have is regarding a credit report. A student asked, if I only have a debit card, do I still have to check my credit report, even if I don't have a credit card?
That's a good question. Yes. Just because you don't have a credit card right now, with all the potential fraud going on outside and hacking and everything going on in the world, right? Anything could happen to anybody. It personally happened to me. A couple of months ago, somebody started taking money out of my checking account because I made an ATM withdrawal somewhere. I didn't realize it because that specific day, I don't know how, I didn't check my checking account. Next thing you know, the money's gone. But if you don't have a credit card, it's okay. And if you just have a debit card, you should still check your credit report, because what if there's something on there that you don't recognize? So you have to be sure you're the only one that could fix this. It's your report. This is your social. This is your financial history, financial GPA.
some companies, some banks actually, if you have a debit card, they'll allow an overdraft piece of that as well. And that may be a form of credit. So if you just have a debit card, it's also good to check your reports to make sure that there wasn't also a credit piece that was added to it.
I mean, an interesting thing is that, remember I mentioned Affirm earlier in the program. Affirm soon may be reported on your credit reports. These small buy now, pay later programs, they're not really reported, but with new regulations coming out that's in the works, that they might become reported on your credit report. So,
It's free. You do it every year, you'll be fine.
Annual credit, I mean, the link is there. Please check your credit report once a year. I highly recommend it, even if you don't have a credit card, just to be safe.
I also heard some horror stories with identity theft. And, checking your credit report can be really helpful to catch something like that as well on time before it becomes a real horror story.
Correct.
Even for students that have debt, student loans, that's going to be reported on your credit statement. So you should be making sure that the personal information that you've shared with your lender for your student debt hasn't somehow been compromised, especially in the most recent unrest in the world. There's been much more cyber threats against financial institutions. So please, always, you get a free opportunity on the credit score to take a look at it. I would do it annually.
Can we please discuss a bit about debt consolidation? Is it some of the positives and negatives?
Sure. So that's a very good question also. I mean, love the questions. So debt consolidation, right? Things happen, right? First thing I want to say is, just because you have a low credit score, it's not the end of the world. Just because you have a lot of debt, it's not the end of the world. Just remember that. You can recover. So let's say, in a scenario, you have 5 credit cards, a personal loan. Maybe you went through something and you had to take on all this debt. You have now so much debt, not enough income to pay it. So what do? If you can't afford to pay the loan, then you can't afford to pay the loan. And the lender will know that when you don't make a loan payment, and it's going to report on your credit report. It will affect you adversely because you miss a payment, 2 payments, etc. But communication is key in life and when it comes to loans. Speak to your lender. If you have a financial hardship, and you're trying to consolidate and repay those debts with good faith, lenders are not obligated to work with you. However, if you ask your lender and you request some type of workout or a repayment plan, you're showing them good faith that you have the intent to repay this loan or this debt. And in return, again, I can't speak for all lenders, but you will get a response. If you don't ask, you don't know, right? So debt consolidation, I highly recommend it, especially if you can't afford to pay the debt. But now I'm gonna switch this up a little bit. I am not encouraging people to take on $5,000, $10,000, $20,000 of debt and then force a lender, hey, I can't pay my bills. I'm not encouraging that. I just want to be clear. So it's only based on a financial hardship and on a case-by-case basis if you truly need it. Communication is key. Speak to your lender or your creditor for options. And and have a communication with them.
The one thing that I would also add to that is when you start to look to consolidate debt, you sometimes have an opportunity from another credit card company to take all of the debts that you have on those 5 or 10 cards and put it into one. If there's a rate opportunity where you're going to lower the interest rate that they're going to charge you, it may be good. However, they'll also then add to your ability to add more debt. So when you say debt consolidation, the premise of it is that you're going to eventually reduce the debt. So again, just be careful when you do those consolidations.
So this is a very interesting topic. And to add a little bit on what Tom just said, excellent point where I'm going to take a mortgage again, for example, right? A mortgage is a good form of debt, a healthy form of debt. You have a lower rate. And let's say you have 50,000 in credit cards and student loans and personal loans. But let's say you have a piece of property with equity. I know we're going all over, but you can access that equity and get a mortgage at a rate of perhaps right now about 5%. And you could pay off that high interest debt and save on the difference. Maybe that debt is 10, 15%. So that kind of debt consolidation is also very helpful, but this could be a whole different.
We help folks all the time with
Correct.
that.
We do that regularly.
Yeah.
And next question that we have, I guess it's connected to what we just discussed. How soon should I start paying off my college debt, my college loan?
All right, so that's a good question. Okay, so when it comes to student loans, right? First of all, you check, am I being accrued interest while I'm in school? With everything going on with the current regulations, most student loan payments have been pushed back. They should not be accruing interest. I mean, again, read your student loan, reach out to your student loan servicer and read your student loan statements. If you don't read it, you won't know, right? So right now, a lot of them are not accruing interest, especially some of the CUNY schools, and the student loans don't have any payments due. If you follow the news, these payments might be pushed out a little further. Now, if your student loan has a payment due, you have to start paying it. But if it has a 0% interest rate right now temporarily, because the payments have been suspended, and you're not obligated to pay, on your credit report, it will show that it's been deferred. It has no adverse effect on your credit score. So if the payment has been deferred, the smart financial decision would be that, hey, if I have some credit cards with a high balance, let me pay those off first until a payment comes due on my student loans. When a payment comes due on my student loans, right? Let's assume I paid off all my high interest debt, and that's my highest debt and my only debt. You start focusing on that. As Toya mentioned, right? Short-term goals, long-term goals. Short-term, pay off your high interest debt. Over time, your long-term goals will be pay off all your debt if you don't need it. So, your student loan, back to your question, if it doesn't have a payment now contractually, focus on other high interest debt you may or may not have. If you don't have any debt aside from your student loan and you choose to make your student loan payment, you can. You're more than welcome to. You'll reduce your principal balance. When your payments do come due, you must start resuming them and paying.
And Akshay had showed that pie chart that it showed a 30% total credit load. The idea there is that you're going to try to make sure that if you have student debt that's coming up, it's going to start to push those numbers up to that high number. Yes, that's when you should reduce some of your debt, because you want to have debt availability if there's another life event that comes up. You're looking to buy a car, you're looking to get married. Anything else that's going to come up in your financial life history, you just want to be prepared. So the student debt loans that Akshay is talking about, please read your statements.
I also want to just add a note about student loans. If you are transferring from schools, it is a good idea to reach out to who you are borrowing from for student loans. I know personally myself, when I transferred into Brooklyn College, I did not notify them. And after 4 years of college, they were like, oh, you have payments now to make. And I was still in Brooklyn College.
Wow.
So please just, go back, check the status of your student loans to make sure that they are being deferred until you finish college.
Great example. Thank you.
That's really good.
We have a couple of more questions. The next one is from Melanie. Is it worth having more money in your checking than savings account? And because of all of the rewards that you mentioned before, Is it more efficient to use the credit more than debit?
So do you want to start with that
answer
one?
that?
Or you want me to-
It doesn't matter.
You can
Alright.
take it.
Alright, I'll take
It's
it.
really put in
It was like a mix, so I was like,
It's like,
so okay, I'm gonna share my personal opinion, right? I love credit. I love credit cards, but at the same time, I know how dangerous they can be. If you have money in your checking account, the person who asked the question, and you're trying to, make purchases, right? If you make purchases with the checking account, do you get rewards for it? Versus if you make a purchase with a credit card, you get more rewards for it and you'll just pay it back at the end of the month. You have to weigh out your options. If I was in that scenario, let's say I have a $5,000 in my checking account and I only get like 1% reward versus a 2% credit card cash back reward, which is the Citibank double cash. I'm not endorsing it, but this is my example. I'd use the Citibank double cash back. I put the purchase on that, get my cash back, pay it off at the end of the month. And I think it is a better benefit for me. As long as I remember to pay it off every month. If I forget to pay it off that month, the next month I'm going to be hit with that interest charge, which is 25, 30% divided by 12 for that monthly balance that I have. So
As you can tell, Akshay is our credit guru. What Toya talked about early in her presentation is making sure that your budget is something that's yours and that you're looking at it regularly. Right, Toya?
Yes, I personally, I don't have a credit card. So I do have an account with our bank, Maspeth Federal, and also with TD Bank. So I have a debit card is what I use. I do recommend having funds in both your checking and your savings. With Maspeth Federal, I actually opened we have a passbook saving account. So I've used that to actually as a saving account, really just to save any money for like a trip or anything. I put it in there because with the passbook account, you cannot take money out without physically going to the bank. So that is a great way for me to save and for me to budget. I know I'm gonna put $100 every month into that account and I can't take it out unless I really go to my account, my bank, give them my passbook and withdraw it.
for savings.
For savings, yeah.
And one of the features that we have with our passbook accounts is that you can link a direct deposit to it. So the idea there is you're having kind of a forced savings account that when you have one of these impulse buys, you can't really tap into that. So to us, that we've been promoting that since 1947, and that's one of the best accounts, I think, for young people to understand how to keep their money safe.
Yeah, and we have colored books.
And we have
just got the
colored,
color books.
different colors for different books now.
Yes.
Yeah, we're hoping to brand those as well to some of the schools that we're participating in. It would be nice to have a CUNY band on there too. That
Yes.
would be pretty cool.
thank you. Question from Kennedy. Do medical debts affect your credit score?
Good question. I love these questions. Yes, if you don't pay your medical debt, they will affect it. If you don't pay any type of debt, it can potentially be reported on your credit report. I'm going to take that medical debt, for example. If you have medical bills, right? You speak to the company that provides that's charging you. And perhaps if you can't afford to pay all of it at once, you can request a payment plan. If you don't pay that payment plan, and if you choose not to pay it, if you're disputing it, like most common way, my insurance didn't cover it, so why do I have to pay it, right? That's the most common scenario. Unfortunately, that's a resolution of a different matter. So if you have that debt and your insurance did not pay it, you have to dispute it with your insurance. But until then, the individuals that provided you the service, they still have to charge you and you still have to pay them. So if you don't pay them, they reserve the right to report this as a derogatory item on your credit and a collection account. They'll refer it to a collection agency to collect on their behalf, and they'll reach out to you. That will negatively impact your credit score if unpaid. Any debt unpaid can potentially impact your credit score, and especially that one, yes.
There's actually a bill in Congress right now that the Biden administration is looking at so that there would not be a connection to the credit report on your medical indebtedness. That has not yet passed. I was in Washington just last month talking to the congressional members about that. So as of right now, yes, your medical indebtedness will go against your credit statement if you have not paid that on time.
Thank you so much. When requesting to check your credit report, do you have to check all three?
No, you don't have to. But it's smart to check, let's say you check Experian today, 3 months later, you check TransUnion, 3 months later, you check Equifax. You now have some time in between and you get 3 different reports at 3 different time periods to know, did anything odd show up? So you don't have to check all 3 of them now. You could check 1 today, maybe 1 in a couple of months, and so forth. Every 12 months, you're entitled to 1 free credit report from those 3 agencies.
From one from each one.
Correct, 1 from each.
And if you do find something that's unusual, you should notify the credit bureau. And with that, you only have to notify one. Say if you see a charge there that you know you did not make and you wanted to dispute that, you can reach out to TransUnion and say, I'm disputing this charge. Their legal obligation is to contact the 2 other credit bureaus to make sure that they're looking at that disputed charge together. If you do have a disputed charge, it's very important to ask those credit bureaus to put a watch on your account. They'll put a freeze. There's different levels of review and safeguards that they'll put onto that credit bureau account. But it's absolutely critical to make sure you notify at least one of those 3 bureaus that there's been a dispute. I am a victim of credit card debt. I was involved in the IRS tax breach that happened a number of years ago. So now I have an automatic lock on all of my credit accounts that I have to renew every year.
So to add on that, that's very important. Tom just mentioned a lock and a freeze, right? You can actually go, for example, to Experian. You can request to freeze your credit report. Nobody can access it until, yeah, correct, your credit. Nobody can access it until you unfreeze it. Let's say you're applying for a mortgage. Before you apply for it, you will have to manually unlock it for the creditor to review, and then you could relock it again. So there's features out there with Experian, Equifax, TransUnion, and you can do that. You can manually have your credit report frozen across the board if you're not applying for any credit anytime soon, and you can unfreeze it on a need basis. I think it's very smart. It's a little more work, but it's for those that want to do it.
In fact, I believe that it's built into the credit bureau apps where you can actually unlock it and lock it automatically from your phone. And one of our features in our accounts too is that we have the ability to lock your debit cards and any other accounts that you have here at the institution. And many institutions are similar to that. So again, they're all connected to the cards and connected to your phone, so you can do that remotely and very quickly.
Thank you. Someone is asking if you are having any summer internships, probably for this year. Are you recruiting?
We are. I would like to mention Christina Gefford is our coordinator for our internship program. We are now taking applications and looking for young and excited financial students to come join us and shadow us and work with us side by side. The internship program really is something that we've utilized to not only help the students, but also help the financial institution. Many of our employees who have been here as employed for 20, 30, 40, 50 years in one employment at Maspeth Federal started as interns. So yes, our program is open. I please encourage you to put applications in through our website. It's an opportunity there on our maspethfederal.com website so that you can apply as early as possible because the slots do fill early.
Thank you so much. Would you be open to answering more questions after the event if the students reach out over email or maybe connect with you on LinkedIn?
Absolutely.
Thank you.
Great. So students, make sure that you write down their email addresses, go on LinkedIn, stay connected, follow Maspeth Federal Savings, follow their page, to stay in touch with their updates about upcoming any opportunities in the future. I don't see any more questions posted, so I am going to once again post the form for you to complete the attendance if you'd like to receive all of the resources that we've discussed during the presentation, and this recording will be available on our YouTube channel afterwards. I want to thank everyone from Maspeth Federal Savings for being here with us today. What an amazing presentation. I've learned so much myself. I'm sure as everyone else who was present today. We would love to have you back. So hopefully we'll be able to plan for something next semester, hopefully. And I would like to thank everyone who joined us today. We're out of time, but I think we've covered a lot of important information today. So thank you so much for being here with us. We appreciate your time.
Christina, take care. Have a great day.
Thank you. Have a good day, everyone.
Can you click us off?
It's gotta be.
Where is it?